Okay, recording this video on Sunday, the 7th of August 2022. It's just gone 4:48 p.m. Chicago time. Do hope you are doing well. So this is our weekend futures market recap, where I go through 15 of the largest futures markets and show you what I am seeing on my charts. They're all arranged here on the one window in TradeStation, and there's some kind of logical order to the way they are arranged. On the left hand side we've got our Euro, British Pound, Aussie Dollar, Japanese Yen. Japanese yen acts a little bit differently, so we keep it off to the side here compared to the other forex markets. We've got the largest financials with the E-mini and the 10-year notes. And then we've got our precious metals with gold and silver. We've got Bitcoin at the bottom, which you could consider as e-gold. And then our commodities over here on the right. We've got the energy complex here with crude and natural gas. We've got the largest industrial commodity, which is copper. And then we've got our ags, which are corn, soybeans, and wheat. So we're going to go through each of those kind of quickly in turn. I'm recording this video. It's actually taken me quite a long time to record this video because I'm trying to explain something to do with the employment numbers that came out this week, and I'm finding it difficult to do that concisely. And so the market's about to open in about 10-11 minutes time. But anyway, this week, first of all, to say generally I do not care about the economic numbers that kind of come out. Yes, they affect the markets directly, when the numbers are released and so on, but I try to be a purist in terms of looking at my charts and the signals and not anticipate what the news is going to be or what the news's impact on the markets is going to be. So just look at the charts, look at the signals, look where the professionals are active and so on. This week the employment numbers kind of came out, and a lot of things changed. Trends that were in place and seemed to be kind of working over the last 2 or 3 weeks kind of stopped and reversed, and I'm wondering if that employment number is kind of a lot more important than I would like to think. And basically it comes down to this. The feeling I had, and I could start to see in the way the charts were moving over the last several weeks, was that the Fed is making a mistake and that they will be forced to stop raising rates and start lowering rates a lot sooner than they expect, or the market or the general public kind of expect. And because of that, we had kind of the big move was the reduction, the weakness in the US dollar, and the result of that in a lot of other markets with trend changes that we were seeing over 2 or 3 weeks. Anyway, the employment number kind of comes out and it's a lot stronger than expected, which means the Fed can continue raising rates into what they think is still a strong economy. Now, whether the employment numbers are good or bad or fudged or whatever, who knows? But when that number kind of came out, a lot of markets that were in nice kind of trends kind of reversed and went the other way. So it all kind of hinges on that and how strong or weak the economy kind of actually is, and whether the Fed is making a mistake or we're going to have to review that kind of decision at a later date. And I'm in a bit of a bind at the moment. I'm kind of holding on to a long euro position that I probably shouldn't be. I should be maybe out of based on this week's kind of activity. But based on the setups, it was looking like that was going to be a nice break above 103, and it's not happened this week. I've reduced my position size, but it's kind of backwards and forwards, and I'm wondering if I should be kind of getting out of that. But anyway, that's my problem, not yours. Let us look at the E-mini first of all, because we have got some signs that we might be coming into this resistance. Now, first of all, I'm going to show you on the daily chart on the E-mini, just to show you what I'm talking about here, and I've highlighted this in last week's video. We're heading up at some point into resistance on this intermediate time frame. So this is better sine wave on the daily chart. This medium thickness lines are the intermediate time frame. We broke above resistance, and we talked about this with the confirmation of an uptrend. So we're definitely in an uptrend in the E-mini until we see pullback to end of trend on the highest time frame. So I'm not worried about that, but there's going to be backwards and forwards, there's going to be tests and so on, and when we get across on this intermediate time frame, that's an area where potentially we could kind of stop, reverse a little bit, just kind of test down, and we overshot the lowest time frame, we could be coming into that resistance. On the lower time frame charts, so on the 15-minute chart, you can see here that was the break above just under 4,000 into a confirmed uptrend, but the end of trend signals ripple through the time frame. So we've had one on the lowest time frame, one on pullback to end of trend on the intermediate time frame, another little one on the lowest time frame after that, and so we've kind of run out of puff here, and we could be coming back down to put in pullback to end of trend. I'm looking for some kind of weakness. Looking for some kind of weakness on the daily chart. At some point. Didn't happen last week, but potentially it's happening this week, because on the E-mini at the beginning of this week we started to see signals kind of pop up. We've kept on breaking a little bit higher, blue professional bars at the highs, exhaustion patterns on the retrace here, and we've got a stair-step trade going on here. So if we see weakness in the E-mini this week, these signals would kind of work out nicely. So that's the first thing that I'm looking for on the E-mini chart. The second one is this Forex kind of trade with the euro and the roller coaster that I've been on this week. Everything kind of looked good at the end of last week, holding a long position, and we started to break through 103. 103 is the absolute critical number, but it was very temporary, and we kind of reversed and went all the way back down to 1.5, 1.015 here on the euro. Which is an area of support that we've seen a lot of blue professional bars kind of come in. So there's not a surprise that we had a bounce there with exhaustion sell. A lot of people kind of cleared out, blue professional bars kind of come in, and we kind of rally back. But then this seemingly is the professionals kind of getting the move going, breaking out. We've got everything kind of lined up together. But then the employment numbers come out, and then all of a sudden at 2.8 we kind of stop, go the other way, and we kind of push down really hard. Now it's not broken those lows, which is good, and we're kind of making a little bit kind of higher lows here, but I really need this to break back up above 2.6, this resistance area here with the blue professional bars, to show that that's actually in an uptrend. So a little bit kind of wary on this euro trade, and might be jumping out of it if this doesn't go to plan, and so far it's not going to plan because of that employment number that kind of hit it down here. And what I don't like is that a lot of the other Forex contracts are showing short signals here. So this week, this is the end of last week, this is the British pound, had that strength there, and then we had a short signal, and this is blue professional bars come in. I think this was an interest rate announcement out of the central bank in the UK. Bang, kind of sold this down, test back up to the high of that range of blue professional bars, and we had signs of weakness, and that's the employment number kind of coming out. So we've got the British pound weakening at the moment with signals short in there. We also have Aussie dollar, what's Japanese yen, but let me show you the Aussie dollar first. Aussie dollar, so here we go again, beginning of this week, signals short here, test back up. We're holding here with blue professional bars at the moment, but there's no background printed red, meaning it's oversold, no exhaustion sell down here, nothing to hold that necessarily. So we could be just, you know, playing here and then breaking back down through the lows of those blue professional bars and continuing this downtrend. So the Aussie dollar, we got signals kind of down, and Japanese yen, same thing again. So at the beginning of the week, nice little signal, top of the market there with Japanese yen, and we weaken from there. On the retrace, you see here no blue professional bars at the lows, here or here. And so all we did was we push back up, then the professionals sell it down again, we get another signal, whole family of little sign of weakness signals, bang, we kind of come back down. And there's no exhaustion sell pattern down here. This is a little exhaustion buy and bearish divergence. We need to see that blue on the other side, that blue dot on the other side here, and a whole bunch of blue professional bars to kind of mirror all of that activity there. So that's what I'm seeing on my charts. I should be out of this euro trade based on that, but I'm being stubborn at the moment. So let's see how it goes in the next 24 hours, whether I reverse and get out of that, or you know, continue holding. But anyway, 2.5 is the number on the euro. If it gets above that, it'll go above 3, and I think it'll break out. And we had that shock this week from the employment numbers, and the professionals potentially have used that in order to maybe increase their positions with expectations of rallies. So there we go. So that's the E-mini and the Forex contracts. Now ags are looking interesting. So a couple of weeks ago, this is the ag situation. We had a really oversold kind of position. We'd had big declines in ags, and then we had a gap up on the Sunday night. The professionals used that to kind of scare people out, take profits, force it back down. And now we've come into those lows. I know we broke below those lows, but we did have blue professional bars each time. We've kind of come into those lows here and here and here, and we are strong. and we've got triple signals happening on corn. So that uptrend could be in place on the ags. We got corn kind of potentially setting up, and we've got soybeans. We got another signal on soybeans this week. It was a heck of a rally on soybeans. Now have I got this right? This is where we had the gap up, and then it kind of came down, and then we broke back up again. So that was a big rally, but no blue professional bars at the highs on soybeans. And so when we've come back down into this zone here, which was kind of a previous high, becomes an area of support, the blue professional bars kind of come in again. So we need to get above 1428 here for confirmation that we've got a signal on soybeans. And on wheat, signal a couple of weeks ago here, that was the gap up where all the professionals used that as an opportunity to get up, get out. But you've got exhaustion sell patterns down here, some blue professional bars down here, and exhaustion sell bullish divergence. It's not signaled yet. We don't have the background in red for oversold, but we could see wheat starting to strengthen. I'm surprised with the news out of Ukraine that the ags and particularly wheat aren't stronger, because although they've got a harvest in, they can't get it out of the country to kind of sell it into the market, or at least it's difficult to do that. So I'm surprised wheat isn't stronger, but let's see this week if we get the ag commodities really starting to rally. We've also got the market just opening up in a minute's time at 5. Yeah, it's just open there, so we're starting to see some of these things move. All right, gold, silver, and Bitcoin. So gold, here we had a nice rally into the highs. Started off 2 weeks ago, but we've run into a little bit of trouble. We've got a couple of signals here with exhaustion buy, bearish divergence, and we're overbought at this point. But don't like these signals because there's no blue professional bars at the highs here and here, and each time we kind of come into the lows, you can see the blue professional bars have stepped in there and there, and exhaustion sell bullish divergence. So we're holding at this point. So I still think the rally in gold is in place because we've not seen professional profit taking out those highs. So we'll see breakthrough 1809 will be the signal. And on silver, same thing. At those highs, didn't see blue professional bars. We've seen exhaustion sell, blue professional bars kind of coming at the lows. They'll tend to move together. Silver has tracked gold at this point, so there's no signals at the moment, but let's see if gold continues to rally, then silver will be dragged up through this kind of 20 area of resistance. Bitcoin has been doing quite nicely. We had some nice signals over the last several weeks, so you can see that. So just go through this. So much activity in Bitcoin. 4,500 tip bar chart, maybe should be bumped up a little bit, but we had some nice signals. This is last week with rally into that, and then a short signal with the high up there at almost 25. 25's a critical number to get through. Bitcoin, we've got exhaustion sell, bullish divergence, and we're kind of just trapped in this kind of zone. But on the daily chart, potentially we have a setup for a break above 24, 25. You can see here it's exhaustion sell, bullish divergence came in this week, and if we get above the trailing stop on a better pro-am, that'll give us a signal. So 24, actually 3 is kind of the number that we need to kind of break above. So let's see if we get that, if we get strength in gold, silver, and Bitcoin kind of this week. That would be good. So what have I done? I've done the ags, gold and silver. Yeah, let's talk industrials. So crude, we didn't get a signal here at the highs, which is really a shame because we crashed from 100 down to 88, and so far no blue professional bars at the low. This exhaustion sell signal is getting the move going with those blue professional bars, and you can see here each time we come back up we get signs of weakness, kind of signals, and we keep on going down. So crude downtrended, won't be over until we see blue professional bars and exhaustion sell at the bottom there, but it was a pity we didn't get signals at the highs. Same thing's happening in natural gas, where it's kind of weakened from here. We had this blow off move, we had signals that were early, but it was kind of a parabolic move into those highs above $9. Yep, they've trapped it at 750 professionals and forced it back up into exhaustion buy, but that's maybe just killing fields where they're using that opportunity to force it up to take positions short. Getting through the low of 750 would show that we're kind of weak and the downtrend's kind of continuing there. So we got natural gas and crude weakening, and we've also got potentially a downtrend starting in copper. We've had signals the end of last week into the beginning of this week. been fussing around these kind of levels here. A whole bunch of blue professional bars kind of come in here. We're testing up a breakthrough 350 on the way down, which show that we've got a confirmed downtrend in copper. It's funny, the employment numbers are showing that the markets, the economy is kind of stronger than expected, but the industrial commodities and the energy sector are all weak at the moment, showing that the economy is actually going to soften and those prices are kind of coming off. So we go, and the last one is 10-year notes. Now, last week's video, we potentially had a setup here for a short trade, but we didn't get a signal, and that's because of the way the signals are coded. We had exhaustion buy, bearish divergence, we were overbought, we had blue professional bars, and we cracked the low of those blue professional bars, but the fly in the ointment was this signal here with an exhaustion sell, and so that kind of setup is negated when we see a signal like that that gets in the way. So it's a shame we had a decline in 10-year notes, and then we had a little bit of a rally from there, but we broke through again on those employment numbers. When those came out, bang, the 10-year notes went down because the rates expectation is kind of going up, and we've got weakness happening in 10 years at the moment. No blue professional bars at the lows, no exhaustion sell, so we're in a downtrend in the 10-year. So let's have a look at the euro and what that is doing just on this open before I sign off here. Kind of nothing particularly interesting yet at this moment, but I'm going to be watching that like a hawk over the next 24 hours. So there we go. I hope that was of interest to you. There's another video coming out in a couple of days' time that I recorded yesterday on relative strength, using relative strength to identify buying opportunities in emerging markets, which is kind of not a topic of discussion at the moment because no one is touching equities or emerging markets, but being the contrarian I am, I thought I would do a video on that and see if there are opportunities in the emerging markets. Anyway, hope your trading is going well. Looking forward to this week's trade.